TJ the Wheel Deal coming at you live. It is Wednesday, January the 28th, 12:07 a.m. Texas time, Central Time. Sorry, I'm running a little bit late. Just trying to get my wife a credit card because she has to go buy a new bed frame type thing, headboard, footboard. I don't know what happened. The one in the guest bedroom broke. Had my buddy stay over, and I'm not sure if he damaged it. Freaking Gavin peed on the bed, on our bed the other day. So we went to go sleep in it. And then it broke when I laid on it. So I don't know if it was already broken or if I broke it. Oh my God. Oh, it was a shit show. It was a shit show. So anyway, she's going to do that. And I had to give her a credit card because I'm always trying to get points. Whew. How are you guys doing? How are you guys doing? Have you ever looked at your portfolio and something like sticks out at you and you're like, how did I not like see that before? How did I not like see that before? That happened to me today. That happened to me today. And I'm like, shoot, man. I'm going to see if I can rectify it. Not sure yet. I'm not sure yet, but I'm going to see if I can. I'm TJ the Wheel Deal. I sell puts, I sell calls, I collect premium, I roll and makes dollars and cents. I'm known for buying the timely leap. And before I did all that, they used to call me the king of swing in the oil field because I would just like buy one stock and hold it till it went up $2 or $3 and make pretty good money. And I did that for years. So I see a swing trade opportunity in the portfolio right now, and it's a big swing trade. It'd be, over $1 million, over $1 million, possibly even $2.5 million, depending on how heavy I go. 1.25 million or 2.5 million, depending if I buy 50,000 shares or 100,000 shares. The issue is I bought 50,000 shares of another stock. So I'd have to sell those in order to buy these. And those are the gimmies and the gotchas, right? Those are the gimmies and the gotchas. Before we get into that, though, let's pay respect where respect is due. We're doing this 1 Minute with God series. I've already recorded this for X, so I don't have to record this as I read you guys. But it's peace, January the 28th. How can I find peace in the midst of my battles? To put on peace means that you are ready for any battle because you are confident in the knowledge that you are on the winning side. When Satan disturbs you through trials and temptations, you can face your challenges with composure and with the confidence that comes from knowing that your salvation and your future are secure. What a beautiful feeling knowing that, for a lot of people, worst case scenario is death. For a believer, well, that's ultimately just a step that we need to go through for our, to enjoy eternity in paradise. For shoes, put on the peace that comes from good news so that you will be fully prepared. Ephesians 6:15. If you do this, you will experience God's peace, which is far more wonderful than the human mind can understand. His peace will guard our hearts and mind as you live in Jesus Christ. Philippians 4:7. God's challenge. How beautiful on the mountains are the feet of those who bring good news of peace and salvation, the news that the God of Israel reigns. Isaiah 52:7. It's good stuff, man. There's a lot more to life than just selling puts, selling calls, and collecting premium. You got to make sure that you get that answer to the test right at the end of the day, because all of the riches of this world, ultimately they belong to him. We just have to be good stewards of that. This is 1 Minute with God for men. It's a daily devotional, 365 daily devotional. So anyway, pretty good stuff, man. Pretty good stuff. Woo! Let's get into it. Let's get into it, guys. Let's get into it. The portfolio was up quite a bit this morning, and then it wasn't. And then it went up again, and now it's not. And that's probably par for the course. That's par for the course because the Fed speaks today. So what I do have to do, though, is I got to take these comments off the screen. I got to take these comments off this because it's going to, okay, I can see it in the background over there. So let me at least do that. Let's get into it. Let's get into it. See what's going on. Let's see what's going on. First thing I look at is always the profit and loss for the day. Down a little bit, relatively speaking, pretty flat. And then I always go to the buying power percentage 53, 60s, 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 94. So we already know that the buying power is ticking up a little bit more than I would like. My comfort level is under 60%, preferably under 50%. So we're already in the mid 60s. So it tells me a couple of things. That tells me a couple of things. One, the VIX might be spiking. That's one. We might be in the middle of a volatility expansion. That's one. Another thing that it tells me is that we probably have some incoming expiration dates, because when you, especially when you have portfolio margin, even when you just have regular reg T margin, as you get closer to expiration dates, and if your short puts or calls are getting challenged, the brokerage has a risk monitoring algorithm, if you will, and they're like, hey, let's set a little bit more money aside because this guy's playing with fire. And when you do that, there's always a chance that you're going to get burned. So let's put a little more money in escrow, if you will, just to make sure that he can make good, she can make good, because she's choosing to play in an area where we don't recommend. We're the tasty trade way in this case, right? Sell 30 to 45 days out, manage 21 days to expiration, so you don't deal with all the tail risk. You don't deal with all the gamma squeezing, accelerating the deltas. You don't deal with such sensitive vegas, and then you don't have your other secondary and tertiaries like the vamas and the charms and all this other stuff, right? You don't have to deal with all that stuff if you just do it the tasty trade way. So put 30 to 45 days out, manage 21 days to expiration, go get the easiest 50% from the contract, and then just keep doing that over and over and over again, and you kind of stay out of harm's way for the most part. But I don't always do that. Why? Because sometimes there's going to be an underlying where I'm like, I'm kind of okay owning it. Owning it. So your portfolio, your risk monitor, if you will, the algorithm that's monitoring your every move, and trust me, these guys have some sort of an algorithm that monitors your every freaking move. These brokerages know your tendencies better than you do. They're like, okay, well, these are portfolio secured puts. But if you're going to dance this fine line, if you're going to dance with the devil, if you will, and go to expiration dates, we're going to turn them a lot closer to cash secured puts as you get a little closer to expiration. So that is what you're seeing there. Is I'm going to go through these portfolios, and you're going to see that most of them have a SoFi expiry this Friday. And it also stands to reason that they're going to want a little bit more buying power requirements because earnings happen to be this Friday. So it's like a double whammy. You got earnings and you got an expiration. Excuse me 1 second. Okay. So anyway, let me check in with you guys here. Hey, what's going on, Manish? What's going on, Mr. G? What's going on, Madraj, 88. Snowball, Snowman, sorry. Drew Nation, Nez Varbiome. Y'all are killing me with these names, guys. Come on, man. What happened to Jack and Jill? And Jen, JT the Elder, JW the Elder, uh, R Max Sports CG 1319. What's the name of that book? 1 Minute with God for Men, daily devotional, 365 daily devotions. Luipi, Pain Pal 52-week low. Oof. I think it got downgrades too. They were saying on our WhatsApp group. ITJ Green, I guess, is now a good company again. What are your thoughts on SBRA? That's a REIT. Not familiar with it. Margin is calling. Not close to margin. It could happen if volatility were to expand quite a bit, but we're going to go through what would I do? What would I do if all of a sudden everything's in parentheses? You got to have a 1, 2, 3-step game plan that you're going to do. That way you're just executing a plan and you're not like, oh, freaked out. Your blood pressure's out of whack. Getting, of course, where are we at here? Hi, guys. Hey, BC, how are you? Margin not helped with SoFi falling off the last couple of weeks. Absolutely. Good afternoon, Wheelers. So let's see if something stands out a little bit. So we're going to just take it from the top. We're going to take it from the top, guys. We're going to just stay over here because I can't be going back and forth today because I might have to make some moves. So I have to stay in the area where I could actually make those moves. We got account ending in 35. This is, mid 500s on the account. We've got 1, 2, 3, 4, 5, 6, 7 positions there. Utilizing 53% of buying power usage. It all looks pretty dang good. There's $175,000 of extrinsic value there. So let's look. Let's put this on days to expiration. And sure enough, we got SoFi. So what do we got going on here? Just to put it into context and how you could see your buying power evaporate, right? You gotta be able to do some very basic arithmetic if you're going to sell options, guys. You got to learn how to add, subtract, multiply, divide, and understand like percentages, fractions. You got to understand the basics if you're going to play in this game. It's just the way that it is. And if you're not that good at it, you got to also use Grok or ChatGPT or lean on your fellow man to kind of help you out. You got to understand the extrinsic value. There's some things that one second, live on YouTube. It's our buddy Albert. Okay. So right here, it's only utilizing $40,000 of capital requirement, buying power, right? But let's just talk about the realities of this trade, the math behind the trade. We got an agreement to buy $240,000 worth of SoFi at $24 in 2 days. It's comfortably above that, but it is still a 32 delta. So keep that in mind. Now, there's only $5,900 of extrinsic value on the clock, and you see a little snowman there, right? That's your theta. We're collecting about half of that today, and the rest tomorrow and the next day. Right. So it's about 2,200 a day. It'll be probably about another 2,000, 2,200 tomorrow. And the rest of it will be hanging in the balance Friday. But SoFi reports on Friday. So what are we shooting for here? So what we're shooting for here is as long as it stays above our strike price, we're not going to do anything. We're going to try to collect as much of this data, as much of this extrinsic value as possible before we roll to the next cycle. I'm not going to roll this trade prematurely. I'm not going to do it right now. Rolling this trade, since you're already in it, you're in it to win it. You should stay in it as long as it's comfortable, but it's not in the money and you have enough buying power. Because let's say wake up tomorrow and the capital requirement buying power is like $100,000. still going to be okay. It's going to shoot us up in the 60 percentile, 64 percentile, whatever it is, but it's still going to be okay. So we can afford to stay in this particular trade. Now, if SoFi dips to 24.20, something like that, then that might change a little bit. And we'd be like, okay, we got caught a little bit. Let's roll out another 30 days out. Make sure the algorithm still likes us. And then we're going to go try to pick up another $6,900 on the roll. So now we have the 12,000 and now we have the 6,900. So collectively about, what is that? $13,000 or so, $12,900 in premium that we collected. But now we got to stay in this trade an additional 30 days. Those are the gimmies and the gotchas. And it likes it a little bit. Because it's like, okay, we're going to give you the $7,000, $6,900 in premiums. We're going to increase your buying power a little bit. We like the move. What it would like better probably is to roll this out, but probably also down a tick. It would probably like that move better because now you're de-risking the position, right? Instead of $240,000 in notional, now it's only $230,000 in notional, and you're not in it for the credits anymore. You're like doing what's best for the portfolio, if you will. So now if you do that, it rewards you a little more, right? So it's like, okay, you're not getting this in premium anymore, which is about $6,900. You're only getting $3,300. So we're going to reward you by giving you more buying power back. So it's rewarding you based on how responsible, or punishing you based on how irresponsible you're being with the position. So that's where we're at, guys. That's where we're at. And why are we doing this? Is because I'm kind of okay owning SoFi at $24. I'd be more okay at like $22. So in my mind, I'm like, okay, if SoFi kind of shits the bed on earnings, I'm like, okay, I'll roll this 2 or 3 times before we take ownership, and then we'll write the shares back up. But I believe in this narrative and fresh horses we ride, all that stuff. I think there's going to be a triple beat tomorrow. I think there's going to be a substantial raise. I think that Nodum knows. Again, this is me trying to get in his head and thinking the performance stock units mean something to this man. He wants to get to the other tranche. He's not going to be able to sandbag guidance because people say he sandbags earnings. What? Yeah, kind of, because he sandbags guidance. So he knows that this market is not going to reward the share price if there's not a beat plus guidance. Now is the beat. Everybody's talking about a beat like it's a foregone conclusion, a triple beat or a double beat, right? Top and bottom line. The triple beat is if you beat on the guidance raise as well, right? You raise guidance. I haven't really done the math to be 100% sure, because what's the street expecting? Like 11 or 12 cents, right? 13 would be solid. If they could deliver 13 EPS, earnings per share, that would be solid. But this is something that we have to take into consideration. There's been a lot of dilution as well. What's that going to do overall to that metric? I don't know. I honestly haven't taken the time to even halfway figure it out, because dilution happened, guys. We can't act like it didn't happen. So it's like this. Like, to me, I look at dilution like this. There's just 2 analogies that I like to use. I like to use a piece of pizza, and you have 1/8 of the pizza, and then they dilute you in half. Now you have 1/16 of the pizza. They don't make the pizza any bigger. Your sliver gets smaller, right? That's one way to look at dilution. Another way that I look at dilution is the float. The float gets bigger. So I look at a body of water. So if you look at a body of water like a tub, like one of those cold plunges, you get in there, it's real easy to make a ripple. It's real easy to make a ripple because it's a small body of water. But if you go jump into the Pacific, you jump into the Atlantic, it's a much bigger float. It's a much bigger body of water. It's hard to make a ripple. You're definitely not going to cause a wave. It didn't matter how much commotion you make in the Atlantic or the Caribbean or the Pacific Ocean. It's not going to happen. It's just not going to happen because it's too much. It's too large of a body of water. You're just not big enough to do anything there. But if you start splashing all over your tub, half of that water could end up on your floor. And that's what happens when they keep increasing the float, is it takes a lot more to move the needle, the share price. Maybe y'all are following the analogy. Maybe I suck at these analogies. I shouldn't do it. But I'm trying to give you guys something you can wrap your mind around. Like, there's reasons why these miners haven't been running as hard as they used to, because these bodies of water, these floats, have progressively gotten bigger and bigger and bigger, because just about every CEO related to the Bitcoin miners, my beloved Bitcoin miners, Riot as well, dilution's been the solution. That's like, I feel like that was on their masthead. Like, every one of these damn Bitcoin miners will say dilution is the solution. That's the fastest way, the cheapest way for us to get capital. Let's just give more shares to the crackheads. And that's how they raise capital. So SoFi did that to us twice, and big, couple $1 million worth of dilution. So I don't know. I feel like, nobody's really talking about that aspect, but that when I pondered on that whenever I was in the sauna last night, I was like, shit, is this like a for sure? Because a month ago, if SoFi was at these levels and it hadn't been running up to earnings, I would be like, I want to buy some shares as a swing trade, because that's what I'm contemplating right now. And we're going to get into the snapshot here in a second, but I just wanted to look at these real quick. And it's going to be the same thing across the board. This one, the reason it's getting annihilated a little bit today is because of PayPal downgrades, all the shit, right? It's all no bueno. What's good here is we're running the naked calls. That part's good. Over here, same deal with SoFi. You can already see the buyer requirement over here. 200 contracts, $80,000. The other account had 100 contracts, $40,000 in buying power requirements. So this is something to be mindful of, to keep an eye on, right? PayPal, we've already got these puts that went in the money. And luckily, we do have calls. What sucks is we don't have as many calls as we do puts. That sucks. I'm tempted to add to those calls, but man, it would have been better to add to them, before all this crap happened. So it is what it is. We'll just manage that trade. CleanSpark's doing well. It's not requiring a lot of capital. I could consider maybe taking off that trade just to help a little bit of the buying power, but it really ain't going to do much. It really ain't going to do much. Right now, the reason that the buying power has snuck up on most of these portfolios is because we're on it's the same SoFi trade for the most part, right? Aside from the account on the top and the bottom, they're all in the same SoFi trade. So it's all about SoFi right now. Palantir is also getting hammered a little bit, right? It's getting very, very close to that 200-day moving average, guys. It's about $158. If Palantir is already below all the major moving averages, aside from the granddaddy of them all, which is the 200-day, that is going to be the biggest area of support. If it's above it, it's going to be the biggest area of resistance if the share price is below it. So we need that 200-day to hold on. And what Palantir desperately needs is for next Monday or Tuesday to roll around, whenever 2-2 is. And they need earnings. And they need a good earnings. And they need to remind Mr. Market that they are Palantir. They are a freaking unicorn. If they're not able to do that, this thing's going to 120, 110, probably 100. That's just the reality. And I'm excited about it because this is a very easy strangle to manage. A very, very easy strangle to manage. So I'm excited about it. I know a lot of y'all own shares. So hopefully maybe y'all sold some calls, maybe bought some puts, kind of did like a collar, if you will. Hopefully you did something to preserve your capital appreciation. And if you didn't, I want this tuition to serve as something very valuable for you. Your favorite ticker needs to become your investing balance in your portfolio, not any particular ticker. Forget about all these crazy allegiances to these companies. These CEOs sell stock all the damn time and they don't answer to anybody, so to speak, maybe to their board. They don't answer to us. And we just have to infer why they did it. We have to speculate as to why they did it. But we also know that people sell stock for a multitude of reasons, the insiders, but they usually only buy stock for one reason. It's because they believe that the shares are going up in value. So that is the one issue that I've always had with our beloved Palantir is I can't remember a time that insiders were buying this stock like crazy. Just saying. The reason I got super, super bullish on SoFi a couple years ago was because Anthony Noto was giving us the playbook and buying the stock like crazy. Now, that being said, that doesn't mean that the stock's going to go up because obviously Palantir has gone up a lot more than SoFi. But I'm just saying, dude, if you go look at all the, Alex Karp's purchases and sells, I'm pretty damn sure that you're going to see a lot more sells than purchases. I'm just saying. So be mindful of that. He's taking care of his personal bankroll. You owe it to yourself and to your family to take care of yours. That's what I'm saying. I ain't dogging on the man for getting rich. He freaking earned it, right? Good for him. And he helped a lot of people get rich too. So good for him again. Doubly good. But what I'm saying is if you get to a level, you need to consider capital preservation as well. That needs to enter into your mindset, man. If not, that is going to be tuition that you're going to pay over and over. And riding these roller coasters, that's fine. If you have a 10, 20-year horizon, you got that cushy job, it's no big deal. But if you're living off the portfolio, those drawdowns could be extremely, extremely costly. Just kind of keep that in mind. Portfolio, same thing over here. Same thing over here. SoFi, 50, 20 capital requirements. Y'all are already seeing a trend, right? 100 would be 40, 200 would be 80, right? So that's what's going on with this one. And then it's getting hammered with PayPal down the road. It's all the same shit. It's all the same shit. Strategy was at 165 earlier. Now it's not. This account here, again, SoFi, 200 contracts. It's at 80, right? So everything's very, very consistent across the board. So I'm showing y'all multiple portfolios on the same platform. So don't be like, oh, my brokerage has it out for me. It treats everybody the same way, man. If you're in the same types of trades, it's going to treat you the same way. It's just the way that it is. It doesn't discriminate. BMNU's working here again. That part's good. And when you look at this trade, I mean, we've worked this thing. We worked this thing, guys. You look at this thing. We have worked it. Buying shares when it didn't feel good, all that stuff. It's all right there. Screenshot it. Look at it later, but double down a couple times because we know that we have an agreement to buy 10,000 more shares at $8. So I'm like, well, shit, you're on the hook to do that, you need to scoop up some more shares down here in the 4s and then the 5s so that whenever you get assigned the shares on the 8, if you don't feel like rolling it again, because I rolled this last week, you still have an average in the 6s. You still have control of the position. You're still able to sell cover calls from a position of strength versus a position of weakness. So all those people that say you shouldn't average down, you shouldn't add to a losing position X, Y, and Z, that's cool. That works for you. This is how often I have to manufacture the win because I'm usually wrong when I fire the first couple of bullets. I just am. I don't hit the target right away. If you're that kind of sniper, well, good for you. Good for you. I'm not that guy. I wish I was because then it would be easier to make money. But I'm not that guy. So I have to be willing to double down and sometimes triple and quadruple down so I can put myself in a position to average down and average out and manufacture the win. And that is what I'm doing on this particular account. And now it's looking pretty good. We got 30,000 shares for sale at 7. We're not cheering against the stock. Why? Because we collected premiums and we know that we're qualified to make, $1.78, something like that. in capital appreciation on 30,000 shares. And then if it runs, well, that means that the $8 puts are no longer going to be in peril. And if it stays over, it goes over 7, Gavin. It goes over 7, stays under 8. Well, then we're going to have 10,000 more shares anyway, and we can just keep selling calls on that. So again, we're positioning ourselves to manufacture. PayPal, 55 and 65, same deal. Clean Spark, same deal, 65%. And then we got the Palantir trade. Account ending in 33. Account ending in 33. We've got same type of deal. SoFi, Gavin. We got account ending in 33, 24 puts, same deal, right? We already know. BMNU, another one where we got 15,000 shares at 57 and we're selling them at $7. So things are good. Same deal here on PayPal. Strategy, this one's not doing well today, but it's doing well. And the fact that this is an agreement to buy strategy at 130, man, there's not a whole lot to think about. And then Palantir, again, it needs to hold. I can't emphasize it enough, guys. Going under at 158 is not going to be good for the stock. It's just not going to be good for the stock. I've considered selling more calls across the board on all of these. Count ending in 20, same deal. The only difference here is we don't have SoFi expiring right now. We have it 23 days from now at $26. That's in the money. So that's something that I'll have to manage at some point, or I'll look at the cash. Is there cash? Yes, a lot of cash. Okay, cool. Maybe we just take ownership of the shares. Who knows? But we're not going to panic right now. It's all good. Strategy 135. We got BMNU 530. A little bit down on the shares, but I think we're going to be okay. This is an opportunity to sell 500 more contracts. Let me do that real quick. 500, because there's 500. We got squatters. 500 contracts. How many contracts is that? 50? 1 second. Yeah, it's 50. Let me do 50 contracts here. Collect a little bit more rent. I forgot that we had those. Oh yeah, that's nice. Okay, we'll take that. We'll take that. Very cool. The hotel's full. 100%. What is it? Occupancy. No vacancies. PayPal, same deal. I have considered just putting a bunch of calls on all of these. SoFi, Palantir, Enphase. Okay. Little account doing okay today because we're all in on BMU. We got 9,000 shares. We got them for sale at 7. So we're about even, a little bit better than break even on the calls. So we don't have to cheer against the stock. Why? Because we bought them at 606. We sell them at 7. That's a win. Plus all the premiums. That's a win. Now let's go to the big account and let's look at the issues at hand. PayPal expiring 9 days out, printing money on the calls, getting annihilated on the puts. The good news is the puts don't expire until December the 18th, and they're still out of the money. It's a 34 delta. It's not that big of a deal right now. And the way that I look at it is this is an unrealized gain or loss, but this is about to be realized. So I'm like, so you're telling me I can make $108,000 for 24 days. And let's just say it ends up being for 30 days because I got to do the contract a little bit longer on the next one. Because when I sold these calls, PayPal was at like 57, 58. Now it's at 55. But let's just say I average $100,000 a month. And I'm only down $250,000 on the puts and it's still out of the money. I'm like, dude, I can manufacture the win because I'll bring in over $1 million, $1.2 million in call premiums, realized gains. If the puts continue to be challenged, that means that the calls cannot be challenged mathematically. Mathematically, it cannot happen. It cannot happen. It's this or that. So I'm like, well, people are like, oh my God, that's crazy. PayPal, oh my God, oh my God. I'm like, dude, like, do you not know how to see that we're about to have a realized gain here a pretty serious realized gain here. Let's go to realized gains, because at the end of the day, realized gains is a lot better than unrealized gains. We're about to have a realized gain here on PayPal. You see, you take the realized gain of 100,000, and then we're down 220 some thousand. That's why it says unrealized year gain 126,000 to the no bueno. So I'm like, okay, well, I run those naked calls a couple more times. We go from negative to positive, and I got a rental that is printing and printing and printing and printing, and I'm already developing and creating the muscle memory. That way, if I choose to go all in on PayPal at 50 down the road, I already know what I'm going to do. I'm going to immediately sell calls, but now they wouldn't be naked. They would now be covered. And I'm pretty damn happy with the premiums. I'm doing them at 65. If I took ownership of the shares at 50, I'd be selling the damn covered calls at like 50, 51, 52, just getting a little bit of capital appreciation, because it'll be 250,000 shares. Get out of there, get back into cash, regroup, be thankful that I made a couple $1 million on PayPal, and restructure the entire portfolio. So you gotta, it's like I feel like we're in the same theater, but I'm watching a totally different movie. And that's why I say you have the horse and you have the jockey. I feel like we're watching a different horse race. We're watching a totally different horse race. I feel like a lot of you guys, the only thing that you could see is the profit and loss for the day, the profit and loss for the year. So you just know how to look at the actual scoreboard, but you don't really understand down and distance. You don't understand the intricacies and the nuances of the game. And that's what I'm trying to teach you guys on this channel. There's a lot of nuances going on here. So you got to start looking, hey, even though it doesn't look good, does the opportunity to flip the script exist? Like, how would that happen? So the opportunity just presented itself, and this is what I wanted to talk to you guys about. I covered this end phase position a week ago. I covered this position. I bought 50,000 shares at $40.90. I went down almost 100 grand on these shares. And now I'm back to even. And now I still have a manageable call. These are covered calls right now, but I've thought about selling these. I've thought about selling these because they would help the buying power. Thought about selling those, bringing in the $2 million back in cash, increasing the buying power by 615,000. Why? Because SoFi has earnings on Friday. And I thought about maybe buying 50,000 shares of SoFi instead. I've already got 1,000 calls over here on SoFi that are naked. I've got 500 puts that are naked. So I'm like, what if I bought 50,000 shares right now within Phase's money? I've already got an agreement to buy an additional 50,000 shares of SoFi within Phase's money. And that would be about the same capital. It's like $300,000, $400,000 more for SoFi, but it is a stock that I am more comfortable with. And I do see a catalyst because there's, in my opinion, a triple beat coming. And I'm like, what if I rode those 100,000 shares up $4 or $5 for a nice little swing trade? That way this portfolio can comfortably be in the $16 million range and stay there. And I improve the overall health of the portfolio with a real nice swing trade. And then I just keep running naked within Phase, and I'll just keep babysitting this over and over and over again because I got 1,000 puts that are printing anyway. That's something that I contemplated. And whenever I made good on these shares, I made a mental note that said, if I get presented with this opportunity, all things being equal, this is a verbal poll because I'm not nerdy enough to do the polls on the chat. Would you rather own 100,000 shares of SoFi at an average cost of $23.50 because we got the 50,000 shares at 23, 50,000 shares at 25, so at $24, sorry, at 24 average, or 50,000 shares at, call it 41? and you're only going for $5 of capital appreciation. Which would you rather be in? That's the move that just hit me like a ton of bricks earlier today. So I was like, well, what if I rocked with 50,000 shares of SoFi? And I try to go after the $5, which is kind of what I'm trying to do with Enphase. And I sold more backstop trades on Amazon. So I've already got the trade out there on Amazon. We'll see if it fills. If it fills and if Enphase is holding up, and I don't know. Let me click off of here and let's talk about it. This one's a doozy. I don't think y'all thought y'all were gonna get all this here today. You're welcome. Appreciate the 101 people rocking with me on YouTube. I appreciate the 522 rocking with me on X. I want you to name another channel that talks you through all of this today, through all of these types of trades in real time, and shows you the actual trades as I make them, why I'm making them, why I took the trade, why I got out of the trade, etc. I haven't been able to find that channel. If I did, I wouldn't have had to create mine. And that level of transparency and nuance is the stuff that you find on this little corner of YouTube. Let's keep it going. Let's keep it going. I'd love to get some feedback from you guys on this. We're still offering calls for beginners. All the members get calls if you're at the middle tier or above on X. I think it's once a month. At the $25 level on YouTube is the same thing. Once every 3 months. I think it's like $12 a month. And then the weeklies are the people that are paying like $99 a month. Appreciate you guys. On you, the director last week bought 95,000 shares at 6. Then on Monday, fund bought an open market. That shares go should help. It could happen, but I mean, strategy buys a lot of Bitcoin on a weekly basis, it seems, and that hasn't helped just yet. Yeah, there's that. I haven't had a chance to look at Bloom. I'm not even gonna lie to you. I haven't even had a chance to look at it. Nesvar. Yeah, just rock with Nesvar. I don't know how to say the last. Buon. TJ, what do you think? Sold naked PayPal puts at 55 strike, expiring December the 18th, 2026. I opened a position when PayPal was at 60. I think I think you are too. Depending on where you're at, if you have level 3 and stuff, you might want to consider, again, not financial advice, just telling you what I would do is I would consider selling some calls along the way. That way you lock in some wins. You get the positive mojo going with that particular stock. Your calls can't be getting challenged if these puts are going to be getting challenged. And then if the calls get challenged, well, you start rolling those, and that's good news. Why? Because now your puts are no longer getting challenged. Chill over the strike I don't think you have to do anything right now, man. I think that's like way, way premature. I think that's way, way premature. You're in the money by like 50, 60 cents, man. I think you're good. That's the thing. That's the thing. What's going on, my man? Everything's going well over here, man. Appreciate you guys. Can y'all tell I keep losing a little bit of weight? Still haven't eaten today. I got my Gruns. Let me just shout out to Gruns. My wife started buying these 2 or 3 months ago. Man, I feel like you get good stuff out of here. Maybe it's just placebo effect. I don't really know what's in here, but this is like my daily vitamin that I eat. She shops at Sprout, so she got me these two. Made good. I don't know. They're okay. I prefer Snickers. You know what I'm saying? But that's what I have to work with today. That's going to be how I break my fast right there. With how many calories is this? I don't even know. This can't 100 calories. 100 calories right here, and I don't know. There might be 20 calories in here. So that's all that I'll have eaten today. Trying to do it here soon, anytime. Once I have maybe somebody talking. What I'll do here, because this could help me eat, is let me put this on here if anybody wants to join. I don't have a FaceTime till 2:00, guys. So I could take my time today. And we can talk about everything going on. We can talk about the Fed. We can talk about all of that stuff. PayPal downside is limited, in my opinion, but if they get it going, I think it could fly fast with all the partnerships they're doing. Aren't you limiting your profit with those calls? Well, I don't own the shares, so there's no such thing as limiting profit whenever you're selling naked calls. Whenever you own the shares, then yes, you are potentially limiting your profit unless you're going to roll. But it's just it's a seesaw, and you have to learn how to teeter, right? Because I'm like, I can't just have one be directional and only have one side of the trade on, and it's absolutely getting hammered when there's all this other quote unquote free money that I could be picking up right now. So I'm like, I'm still going to be in this trade anyway. I'm still going to endure all that pain, endure, whatever the word is. Why don't I get some of this pleasure over here? And that's why I like the strangle, because you're guaranteed to enjoy pleasure on at least one side. Boy, like, why are people just gravitating to pain? I don't understand it. I don't understand it. I think they just don't like to manage it because it gets uncomfortable. I don't know. No. How far out for calls that you're wheeling now, selling 30 days still? Yeah, it just varies, man. But yeah, mostly. Anybody wants to join? If not, give me a second, guys. I gotta eat these groins that I do. I didn't eat much yesterday, so let me get this in my system real quick. What do y'all think about selling in phase? I'll get to that comment in a second. What do you think about selling in phase and buying SoFi? Or will you just rock with in phase? I mean, you limit the profit on your sold puts. I don't understand that. Explain it to me more, because that doesn't make sense to me. I mean, you limit your profit of sold puts since it's the same amount of contracts. They're two independent contracts, right? I have an agreement to buy shares on one side, and that has all this premium tied to it. And then I have this agreement to sell shares, and that's got all this premium tied to it. Don't own. On Enphase, I own the shares. On SoFi, I don't own the shares. On PayPal, I don't own the shares yet. So I'm trying to understand where your mind is, so I can try to like walk you through it. I'd like for somebody to click the link and let's talk about this. Well, it's just a matter. Why don't you come on to the link, man? That's why I don't like texting. You can. People can solve world problems over the phone in 30 seconds. Or you can text for an hour and you still don't get your point across, right? And that's why I like a phone call. I'm that guy. I'm like, dude, don't text me for a fucking hour. Let's just talk on the phone for 30 seconds and figure it out. Let's just imagine PayPal pumps to 80 tomorrow. What happens to the sold naked calls? I'd have to roll them and roll them and roll them and roll them until I can manufacture the win on that side. The good news is the puts would print, and then I could roll up the puts as well if I feel like the move was sustainable. There's always gimmies and gotchas, right? I mean, here's the thing, guys. I can pull up any chart of any stock, and I can tell you this would have been the best time to sell puts. This would have been the best time to buy leaps. This would have been the best time to buy calls. This would have been the best time to own shares. This would have been the best time to sell the shares. It's easy when you have the answers to the test, right? But this is real time, and that's just not realistic. So you trade what's in front of you based on the information at hand. And right now, because the sentiment is so shitty, the easy side of the trade is the naked calls. Could that happen? Yes. It's extremely unlikely. It's extremely unlikely because PayPal is not a small company. PayPal's not a small company. What would make it move to $80? There's only one thing that could make it move to $80, in my opinion. Only one thing that can make it move to $80. And that would be an acquisition out of nowhere that just makes all the sense in the world. What acquisition? I don't know. I'm spitballing Goldman Sachs, JP Morgan. I don't know. It'd have to be something to that magnitude. Something to that magnitude. I don't know. Let's keep it going. I'm working right now. Right on. Stoic Outdoors, 100,000 of SoFi sounds good. Maybe even sell covered costs for the end of the week when both the premiums for capital appreciation plus cash scared puts. My English kind of sucks. No worries. Especially with the spiked IV. Between SoFi and Enphase, what do y'all think? What do y'all think? Or just de-risk the portfolio some by not having $2 million of Enphase stock now that I got to even, and these naked calls are not really under pressure anymore. I don't know, right? I don't know. That's the thing. This is why investing's hard, because a week from now or 2 weeks from now, we're going to have the answers to the test. We don't have the answers to the test now. But as SoFi keeps dropping, it just seems like it gets into that no-brainer category. So what I'm really thinking right now is I'm really thinking of dumping the 50,000 shares of Enphase for a little better than a break even, and buying 50,000 shares of SoFi, which would only take about $1 million in capital. And it frees up some of our buying power, which lowers us on the buying power usage. That's what I'm leaning to. That's what I'm leaning towards. Kind of like a happy medium there. I feel like I got away with this one. It's always awesome when you have the answers to the test, because originally these naked calls expired this Friday at $40, so they would have still been pretty manageable. But instead, I was like, let me roll in. You know what? Screw it. I don't want the pressure. Let me cover. But now that I've been in it a little while, you see things from a different lens, and you're like, it's like I'm okay. So I think I'm going to do that. It's going to be break even. Didn't make any money. If it fills, right? If it fills. Didn't all fill. So now we're below it. Shit. So we'll see. We'll see, because I can't buy SoFi unless these fill, right? That's the thing. So anyway, that's real time. Y'all are seeing it, right? It takes a while, man. It takes a while. So there's about 6,000 shares have sold. It takes a while to get these types of things filled. I should have started this when it was in that $41 range, right? Because I would have had a little bit more room. So we'll see. Might not be able to work. In sales, they call it talking past the close. Talking past the close. It's a real good question. That's a real good question. I actually think that Enphase could probably double first, in my opinion. But I'm only playing those shares for like $5 in capital appreciation. SoFi has really just been steady. I mean, there are earnings in a week for PayPal. It could make the stock move to the upside if they give good guidance on the other side. For the downside, I'm not sure. Yeah, that's the thing. Yeah, agreed. My company 4 behaves exactly the same way PayPal, the fintech sector. Yeah, it's no bueno. No bueno. Still not filled, guys. Still not filled, and it's 40.85. I don't want to sell these shares for a loss. So I'm like, if you give me what I paid for them, we can dance. If not, then it's all good. But I do like that it would take the buying power back under 60%. It's just because, again, that's uncomfortable. So I always have to be mindful of the buying power. We got to think about earnings. What do y'all think about earnings? What's going on with earnings today? When is it all after the bell? Like, help me out here. I took a nap on the freaking chair with the dog. So the FOMC, when is that? Is that like in an hour or so? Is it Microsoft, Tesla? Who else is reporting today? Tesla? Is it Microsoft? Is it Apple? Who's the? Because I feel like 3 of the Mag 7 are reporting today. SOMC is live now. Let's see if I can somehow show it. I mean, I try to do this all the time and it doesn't seem to work. Meta, thank you. Okay, so let me see if I can figure it out. Let me go here. Let me go to my YouTube. I have YouTube TV. Tried this a few times and it just hasn't worked, but we'll try. Oh, here we go. Maybe I could just do this right here. Can y'all hear that or no? I'm waiting on my TV to see if it shows up because every time I try to show video here lately, it doesn't let me do anything. Oh yeah, I can. Let me know if you can hear it. Or actually, I can just lower the volume here and turn the volume up on my TV. I have the TV in the background. Oh yeah. You guys can hear it. So nothing's going on yet. Nothing's going on yet. So we got it there. We got it in the background. And we'll go from there. Appreciate it. Awesome. So we got that in the background. And let me just go. Yeah. We're good. So is it still loud? Is it still real loud? That's as low as I can get it on my end. Is it still real loud? Yes, I had several shares of Intel last year and I just totally played it wrong. It was when I was doing the thing with them. Just totally screwed the pooch on that. I feel like I had like 5 really, really bad trades last year and Intel was one of them. I think my absolute worst trade of the year was Soxel. I was absolutely convinced it was the easiest money in the stock market when it was like sub 15. And I just totally played it wrong. I totally goofed it. It's one of those things. I'm not perfect. Whenever you trade full transparency, everybody sees your flaws. And that's the thing. I totally screwed the pooch on that Soxel trade. Should have made a couple $1 million on it. Instead, I lost like 300 grand. Just absolutely stupid. Absolutely stupid. Oh my gosh. Rates and change press conference at 2:30. We all have those trades. Yeah, unfortunately, mine are live for all of y'all to see. That's what's painful about them, you know. Let's go back to the portfolio, see what's going on here. Nothing still. Yeah, now it's the chances of filling are even worse, right? Because it phases at 40.76. So yeah, my idea is now in the pooper unless end phase were to bounce back again. There goes that idea. God dang it. Oh well. Maybe it'll come back to me. And I have this other trade on for Amazon as well. I tried to sell. I got the 200s, the 180s, and I tried to put on these 160s. Kind of doing like a little ladder, but I haven't been able to get it filled. And now I don't want it to get filled because that'll put me at like 70% because I was counting on being able to make this end phase thing happen and transitioning the 50,000 shares to SoFi and being under $25. It would have been great when it was like 24.80, but you know, it is what it is. The crystal ball theory is always easy. Other than that, let's look at everything. Let's look at everything here. The PayPal, really, really thankful for those naked calls there. BMNU. What's up, baby? No, it's Jackson. It's right by Topgolf. It's right by Topgolf, and it's kind of like a funky little intersection. There's no, but you have to go like one. You have to go one down and make the loop around because of the way the whoever was on crack that did that highway system there. It's on the same side as Topgolf, baby. Same side as Topgolf. The south side of the expressway. I'm on YouTube. You good? Oh, it's right by Topgolf. Anyway. Oh, my wife and directions, man. I don't know. Oh Lord! And then I let her navigate for us, and I get so angry because she steers me wrong all the time. But I keep firing her from that job, but then I get right back to her. So BM&R, that's the positive in the portfolio. BM&U, those are the positives in the portfolio today. Enphase is an absolute stud. An absolute stud over here. Look at that. I mean, just, man, why don't I have 5,000 of those puts and call life good? You know what I mean? Is what it is. It is what it is. Riot is just doing its thing. Palantir, Strategy, and this portfolio looks really, really busy now. That's why I don't like having so many positions. So these are the other things that I thought about doing down the road. I look at these smaller plays like Riot. I look at Marathon. Look at these smaller plays. The plays. I look at the extrinsic value. The smaller plays. Nvidia. I look at those plays specifically on like the puts or strangles, and even United Health. United Health, I mean, did this one live for you guys, already up $9,500. So definitely there was a bit of an overreaction there, I feel, from the market. We'll see. It's early in the game. Don't want to go on a victory lap. But there is another trade that's been brought to my attention. One is potentially exiting out of this United Health trade and rocking with Oscar, because Oscar gives a lot more premiums for the same capital. So that's something that is a consideration, and it could do the same time frame, 352, and it was at $10. It was at $10, and I did 1,000 contracts. I don't know what's going on. Why is it? There we go. I did 1,000 contracts right in the middle. $159,000 versus the $51,000, and it was $66,000 in capital requirement for, you know, basically double over here, but you get 3 times the premium. Same notional, million in notional over here versus $1,050,000 in notional on United Health. So now let's ask that question, another verbal poll, because I don't know how to do the polls like actual polls. Would you rather have a commitment to buy $1 million worth of Oscar at 10, or $1,050,000 worth of United Health at 210? Forget about the premiums. We already know that the premiums are higher on Oscar, but so is the capital requirement, right? So is it, because the capital requirement, you're seeing it's only 60,000. So that's another one, right? It's like it's extra $100,000 for the same time period, same space, you know, all the stuff. That's another thing that, oh, here we go. Enphase is climbing again. Could this happen? Could this happen? Come on, come on. Do the little hocus pocus, guys. Do the little hocus pocus. While it's doing that, I'm getting hungry. Let me eat some of this candy. I'm sorry y'all are watching me eat and stuff, but I'm working here. What do you want me to do? Love it. Oh shit, 4088. Let's go. Let's go. Let me see over here, make sure I'm not missing anything. Gotta give the right attention to these portfolios. Beautiful. 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 Oh, look at NVIDIA. I wonder if the algorithm will be okay if I show more naked calls over here on Palantir. This 50. Let's see. Let's see if she likes my thought process or she doesn't. It'll let you know real quick. Ooh, she likes it. All right, you're gonna give me another $6,000. Pound train going to 220. It ain't going to 220. Let me see if I have it in all the other ones here too. We got it over here. Where's Palantir? Man, it would have been great to have these on yesterday, right? Uh-oh, I heard it. I heard it. So I'm doing like a 1.5 ratio to 1. How many pounds are here? What? I can't afford it either. We're at 66%. God dang it. I can't believe I don't have Palantir over here. Son of a gun. What can I do to free up money for Palantir? Well, it's all in PayPal right now. That's the issue. Got it. Dang it. What about this one? Got Palantir? Yeah. We need 50 contracts over here. Not optimal. It's not optimal. It's not, super green day or anything. This is more of a defensive naked call. And I'll tell you what, this money right here is a lot more than zero. People get enamored with trying to max out all the money that they get on these premiums. And I'm like, it's a lot more than zero. Like, chill out. It's going to be okay over the longer scheme of things. This one here is 150 and 220. I need more like 75. Oh yeah, here we go. So I need 75 for my ratio. I'm telling you, got to learn basic math here, guys. Basic math, trying to get them all filled in the middle. Okay, this one here. Wait, let me do more. Where are we at here? Where's this one? Where's Palantir? Oh yeah, here we go. Okay, let me do another 100 just for shits and grins. Where's Palantir? Is that right? I'm not even on the right stock. Where's Palantir? There we go. Palantir. Let me do another 100, or is it going to punish me? You see a $12,000 bill, you're not going to pick it up? I don't believe you. All right, let's see where's Palantir at. 50, 70, 75 more. Come on, Enfi. And you got to talk to these stocks, man. If I wasn't live, I'd be saying things like "pinche puta, get moving," and I kind of. All right, the DGen portfolio is looking pretty good today. Hello. I like it. I like it. All right, so I guess my little move would have really been cool. I'd have sold these at 41 and bought these at like 24.80. It'd already be looking like a freaking superstar. But no, that would be too easy. Dang it. Oh well. Oh well. See what happens. We'll see what happens. Let's see what you guys have to say. Oh, it's from the FOMC meeting. We're waiting on the FOMC meeting, guys. To the Federal Reserve. I'm going to try to see. I'm just curious if YouTube TV shows up here, because it hasn't been showing up before when I do it. So let me try to see if it lets me share YouTube TV now. There's Power Lunch right now. I'm just looking at my TV in the background.
Every time you decide to hold something, everybody has a view of it. It doesn't mean they're right.
It hasn't let me share this
No,
before.
because the problem is this economy just does not respond to short-term interest rates up or down in a significant way. Because of that, I kind of view in a neutral rate. If the rate itself has such a minimal impact on the economy,
No, it
that's
doesn't.
why it's such a hard target. I think our star is a mythical star.
And quickly, I'll add, Rick Reeder is talking about utilizing innovative tools.
Yeah.
They don't have to cut interest rates to achieve the goal. The messaging from the White House has been over the top about housing affordability.
Oh, looky here, looky here.
So I'm talking about Operation Twist, Kelly. If you bring in Operation Twist and you bring the duration of the portfolio longer,
Can y'all hear
you
that?
bring down those interest rates, that's going to accomplish the goal, if not even better than the outcome of just cutting 25 basis.
Okay, hold on. That's a great point, Chubby Checker. I love the twist reference. Okay, Francis Donald.
Yes, we're upgrading over here now.
Chubby Checker. I'm not calling
That's a little
you.
true. That's a little true.
No, you're husky. It's a different. Same. By the way, we're the same size, so it's all good, brother. Francis Donald, help us out here, because here's where the confusion is. Jim Bianco, bond market guy, super smart guy, posted this tweet basically showing this idea of a K-shaped economy, right? Where consumer sentiment goes down, but the market
that's
goes
good
up.
news,
There's the
right?
tweet,
Unemployment is
orange
showing
line,
some
consumer,
signs of
blue line
stabilization.
is stocks. We have consumer confidence at a 12-year low, and American stocks mostly at an all-time high. From an economic perspective, any reason why this is happening?
There's a long list of reasons why we see all sorts of K's in the U.S. economy. But as we're having this discussion, Brian, I just need to take a big step back. Next month, we're going to celebrate the 5-year anniversary of inflation above 2% in this U.S. economy.
Crazy.
And we don't even talk about that anymore. We got a Fed that is maintaining a dovish bias. We have dissents towards further cuts. And meanwhile, we have households who are raising their hand repeatedly saying food inflation is too high, electricity is rising, the cost of living crisis is still very much in play for a lot of reasons. And yet that seems to be swept under the rug as we talk about some of the other minutia associated with the Fed. I just wish we'd take a big step back and say, all right, if we're going to run inflation above 2% persistently, what does that mean for central banking? What does it mean for the economy?
Well, how
what
do
does it
we
mean
fix
for
it? Okay,
consumers?
Francis, I
And
don't know how you're going to celebrate that 5-year anniversary, maybe overpay for a cake, right, because of inflation. But how then do we break it? How do we break inflation? Because I think you're exactly right. I think everybody watching, they were hearing about the Fed. They don't care. You know what they're mad about? They're mad that a burger is $20 when 4 years ago it was $12, right? And next year it'll be 21. It won't be 30, but it's going to keep going up. How do we break, and the electricity bills, to your point, and who could afford rugs? Okay, so how do we break that without breaking the economy?
There's a whole range of reasons why prices are higher and have been persistently, and a lot of them are supply side issues. Tariffs are impacting goods inflation, maybe not to the degree that many expected, but they are lifting goods. We have droughts that are happening in South America that are contributing to coffee prices. Now, I'm not blaming the Fed for above target 2%. In fact, I would say a lot of the inflation in the system isn't interest rate sensitive, to your point on housing. But at first, just an acknowledgement that inflation is still running ahead and contributing to some of this weak consumer sentiment would be a welcome relief, I think, not just for consumers and for market participants, but also for central banks around the world that are grappling with this issue.
David, do you want to kind of give us a final comment then from a practitioner's point of view? So we've got the conference now at 2:30.
Yep.
You've said you're skeptical of the need to kind of maybe lower rates a lot more from here. But the Fed chair seems more sympathetic to that point of view, to the idea that you can bring them down a little bit.
Yeah, I think so. I mean, the Fed, I think they are laying the groundwork for giving them the option to cut rates maybe once in June, maybe once in December. I think by next year, I think
messing with these
could be
things,
a completely different picture with the economy, with both growth and inflation falling below 2% in 2027. I think that's possible. So then you may have an excuse to cut rates. But right now, there's a lot of uncertainty ahead of us, and it's way too soon for the Fed to be cutting rates.
You're a little more bearish longer run.
Well, I think that inflation is going to go away, and I think I think you're going to have.
Interesting. Where are we at here? Genuine question. Why not add more Palantir, Enphase, or other corp instead of MSTR? Extrinsic value is only, and you are risking a lot of capital. I'd have to look at which portfolio you're referring to, because the extrinsic value is like 1.8 million or something on the big account. So let me go look at it. In a second. Thanks for bringing it up to my attention. Without talking to the stocks, you're not fully committed. I'm telling you, man. I'll bet 20 Rugman will be wearing a purple tie. I remember they told me Monday that probably paused rate cuts. Nice call. So far to see how engaged the monitor is about how to get inflation down. I mean, barely anybody on Wall Street wants it. Maybe that's why it won't ever get fixed. Yeah, man, I don't know. I just think it's expensive to live, though, man. If you go out to just a regular restaurant, it's $100. If you have a family of 3 or 4, it's $100. That's like fast food's like $50 to $60. It's crazy. No, I just don't know how sustainable that is. I don't know. But let me get back here on the portfolio to see if I can find what this person was mentioning. And it just looks like this Enphase thing's not going to happen. God dang it, man. Oh, but SoFi came back down. I'd really like to make that switch. I would really, really like to make that switch, but I'm not willing to lose money to do it. Like here, I'd lose like $10,000 to do that. Like I'm not going to do that. Because I'm not like it doesn't stress me out to own Enphase at these levels either. So it's got to come to me. So let me look at this strategy here. Yeah, they can't be talking about this one because the extrinsic value is 1.5 million, and we're still trying to manufacture the win on strategy. So can't be this one. Let me look at the other portfolios. There's no strategy there, or is there? Is it this one? Oh, this one right here. Okay. Well, I just got started in this one. And I think that's a real good question. So let me address this right here. It's a really, really good question. So let me help you to understand, to look at the portfolio with my eyes. This isn't a cash secured put. This is a portfolio secured put. So there's a big difference there, right? Because we're talking about $13,000 times 25. So the notional value is $325,000. So this was a cash secured put. There's no way that I'm tying up $325,000 to only bring in about $3,000 in premiums. But because it's a portfolio secured put and it's not just your regular regulation T margin, the capital requirement is only $13,000. So now you look at it in that context, it's a 21-day trade. Who's not going to tie up $13,000 to make 3? That's where things become a lot different. That's why people always ask me, what does it take to make 6 figures in the stock market? comfortably $250,000 if you have portfolio margin and you have the skills to pay the bills, because your portfolio is going to play like it's $1 million portfolio or even a $1.5 million portfolio. So that's where you have to be really, really good at managing the risk and the reward, and being mindful of your buying power and understanding conditional value at risk and all of those types of metrics as well. So there's that. And then also on Palantir, there's something broken a little bit on Palantir, right? If we look at where Palantir has been over the last couple of months or so, it was at what, 207? And then it went all the way down to like the 130s. And then now it went back up, came back down. And then you got the 200-day moving average at 158. And I'll show you what I'm talking about here. I think, where am I getting these metrics? If I could find me some Yahoo Finance right here. These are good metrics for you guys to look at. You don't even have to look at the charts, because some of these guys will give you the metrics. At least I can find it on my phone. I don't normally look at it over here, but I'm going to see if I can find it on my phone. But if you just look at the chart for the last month, look at it, it was in the 180s. And obviously now it's not, right? Now it's not. Let's go 6 months. So this was the high, right? It's showing like 2010, but it was like 207, 208. And then it came all the way down to the 154 level. I thought it had gone to the 130s. But then it's made its way back up almost to 200, 194. It's like, oh no, here we go. Oh no, here we go. Oh no, here we go. Oh no. And that's kind of where we're at right now, right? It's kind of where we're at right now, 159.31. So you can argue that since this top, which was around their last earnings report, right? I guess, give or take, it's had a pretty substantial drawdown. I don't know percentage-wise what that is, right? That's where TradingView is real cool, because you can put on here and you can draw the little lines and it'll tell you the percentage. But if I could ask Grok might be able to tell me. That way I don't have to try to do that math in my head real quick. Hey, Grok, Palantir was at $208 and now it's currently at $159. What percentage drawdown is that?
Quick calc coming up. From 208 down to 159, that's a roughly 23.6% drawdown. Exactly. 208 minus 159 divided by 23 equals 100 times 100% and 23.56%.
Thank you. So anything over a 20% drawdown, real layman's terms, shit, this is stuff that all economists agree on, is a bear market. So from the high, Palantir is in a bear market. So now we're going to go try to find that metric I was telling y'all about. So these metrics here are really, really important.
If you're still curious about Palantir,
no,
it's been a wild ride lately.
I'm good.
Want the latest price?
No, I'm good. I'm good. Thank you. Okay, so
what's on your mind?
I'm good, Grok. I'm good. I'm live on YouTube. Stop listening. So
got it.
So if I could find this metric that says more statistics. Oh shit. Hold on, guys. Oh my Lord. Equals Sue. Oh my gosh. Okay. So I'm going to try to find more metrics. I just don't know why. It just, because it just shows more statistics. That's what it shows on my phone. And I can't. Oh, here, maybe here under statistics, maybe. Click under statistics. Here we go. Maybe. No. Dang it. I'm trying to find historical data, maybe. It's just so much easier on my phone. No, that ain't it either. If I could just look at the chart and just put it on there and it'll show on the chart. Hmm. No, that ain't it. Indicators. What about indicators? Moving average. That's the 50-day. Where did I show? Where did I find that? Was it over here? So the 200-day moving average, right? Let's see if I can find it here. Gosh, I don't know what my cleaning lady is doing, but it is so hot in here right now. I can't find it. But anyway, on my phone, it says commonly used moving average. Where? There's the 200. Where's the 50? Well, anyway, you just got to trust me. The 200 day is like down here. And it's no bueno. And it's no bueno for Palantir right now. It's got to hold that level. Oh, is he on there? Oh, you're welcome. You're welcome. Is he talking? Is he talking? I don't want to miss it. Is he talking? Hey, there's a mitt. There's a mitt. What's going on, Amit? Where's my YouTube TV, man? This one right here.
Timing of additional adjustments to our
There he
policy
is.
rate based on the incoming data, the evolving outlook, and the balance of risks. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis.
Sure we will.
To conclude, the Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We at the Fed will continue to do our jobs with objectivity, integrity, and a deep commitment to serve the American people. Thank you. I look forward to your questions.
So he just read his canned spiel. Dual mandate.
Chris Rugaber at Associated Press. Thank you. I wanted to ask that, you attended the Supreme Court hearing last week on the Lisa Cook case, and Treasury Secretary Scott Bessent criticized that as political. Can you say why you attended and what you would say in response to the Secretary's criticism?
So let me start with, I don't respond to comments by other officials, whoever they may be. It's just not appropriate to do that. I will tell you why I attended. I would say that that case is perhaps the most important legal case in the Fed's 113-year history. And as I thought about it, I thought it might be hard to explain why I didn't attend. In addition, Paul Volcker went to a Supreme Court case famously in, I guess, 1985 or so. So it's precedented, and I thought it was an appropriate thing, and I did it.
Great. And then just quickly follow on the job market. You mentioned last month that the household survey might be distorted, and you also mentioned the potential for overcounting jobs, which would suggest that we're still in a negative hiring pace. So do you see the drop in the unemployment rate as solid? And what's the basis for saying that things have stabilized? Thank you.
So Yeah, really two questions. One is, so we're getting through the distortions in the data from the shutdown. However big they were in November, they're smaller in December. So we're getting to a place where they're no longer material. They're still there, but it's a tweak here and there. The reason why we changed the statement, let me pull it out, was simply it used to say that judges that downside risks to employment rose in recent months. So we saw data coming in which suggests some signs of stabilization. I wouldn't go too far with that, but some signs of stabilization. There are also some signs of continued cooling. And so we thought that was no longer an accurate description of the data. In addition, the outlook for economic activity has clearly improved since the last meeting. And that should matter for labor demand and for employment over time. So for those two reasons, we thought we would take that language out of the statement.
Nick Timbers, The Wall Street Journal. Chair Powell, you've generally avoided engaging with political controversies directly, and the video statement on January 11th was a departure. What made this different, and are you concerned it could draw the institution further into political debates?
So today I'm simply going to refer you to the statement that I made on January 11. I'm not going to expand on it or repeat it. So I'm just not going to, this is really about the press conference and the economy and what we did today, and some ancillary areas, but I'm not going to be getting into that.
Can you say whether the Fed has responded to the subpoenas?
I have nothing for you on that today.
Mike.
Michael McKee from Bloomberg Radio TV. Have you made a decision on whether you would remain as a governor of the Federal Reserve? And if so, would you tell us what it is? And if not, when might we anticipate a decision?
No, and I really, once again, have nothing for you on that today, that either.
Why would you want to leave it all under the circumstances?
Again, I don't want to get into this. It's not something I'm. There's a time and place for these questions, but not something I'm going to be getting into today. Thank you.
Thank you. Claire Jones, Financial Times. Thanks a lot for taking my questions. In another one that might, lead to a similar answer. We've seen quite big movements in the dollar over recent days. What do you think is driving the US currency lower? And have you been at all concerned just by the extent of the volatility we've seen this week? Thank you.
So, Claire, as you probably know, we don't comment on the dollar. Really, the administration, especially the Treasury Department, has the job of oversight over the currency and exchange rates and all that. We don't comment on that. It's not our role. So I have nothing for you.
But what's your view on the market movements? What do you think behind them? Is it asset managers diversifying? Is it?
Yeah, I just don't. We don't talk about the dollar. We don't talk about what moves it around. It's just not appropriate for us to do so. Really, the Treasury Department has that. It's their role, their bailiwick, and we stay off it. We do monetary policy and some other things, but we don't comment on the dollar. Sorry.
Hi, Chair Powell. Neil Irwin with Axios. Obviously, no SEP in this meeting, but in light of the slight firming up of the language around growth in the labor market in the statement, should we assume that the timeline for any further rate cuts is pushed back compared to what people might have thought in December?
Well, first of all, if you look at the incoming data since the last meeting, clear improvement in the outlook for growth. The data have come in, and sentiment, the Beige Book, everything comes in suggesting that this year starts off on a solid footing for growth. Inflation performed about as expected, and as I mentioned, some of the labor market data came in suggesting we're evidence of stabilization. So it's overall a stronger forecast, really, if that's your question. I'm not sure I answered your question.
But in terms of timing or pacing of any additional easing.
So we haven't made, what we'd say about this was that after this meeting, after the 3 recent rate cuts, we're well positioned to address the risks that we face on both sides of our dual mandate, and we'll continue to make our decisions meeting by meeting based on the incoming data, the implications for and the outlook and the balance of risks. Haven't made any decisions about future meetings, but the economy is growing at a solid pace. The unemployment rate has been broadly stable, and inflation remains somewhat elevated. So we'll be looking to our goal variables and letting the data light the way for us.
Steve Leisman, CNBC, and sticking with questions you might answer. Thank you. You had previously, I believe, described the current policy rate being at the higher end of neutral. And if you look at the longer run, the S&P and the longer run rate, 16 of 19 officials are actually below there on their long run. Is the Fed still in a process of bringing it down towards a middle range of neutral? And what would it take to get there?
So the count I did was that 4 of the 19 were at or above that. Maybe I missed by one, but I thought it was 4. And if you look at the dealer survey, it was 10 out of 58 where we're at or above. So you're right. It's the higher end of the range. What we say is it's within the range of plausible estimates. This is the higher end of that range, but so for some people they think it's neutral. I think, and many of my colleagues think, it's hard to look at the incoming data and say that policy is significantly restrictive at this time. It may be sort of loosely neutral, or it may be somewhat restrictive. It's in the eye of the beholder, and of course, no one knows with any precision. So, is that you had a follow up?
I get what you're saying, but some officials have described the Fed being in a mode of bringing it down eventually over time. Are you still in that mode, or is this a place to hang out?
Yeah, no, I would say if you look at the S&P from December, most people had additional normalization. But at the same time, we've done a lot of the process of normalizing. A good piece of it is done with 75 basis points, and before that, 100. It's 175 basis points we've cut since we began cutting in September of 2024. So you've moved now to, Fed funds is running just a little below 3.65%. So you've moved a good way, and we think we're well positioned here to watch how the economy performs, look at the data. We're not making decisions about future meetings, but we do think we're well positioned after those 3 cuts to let the data speak to us.
Every time this guy talks, Bitcoin goes down.
Chair Powell, Mara Moakway from Bloomberg News.
Shut up already.
Did the committee discuss the possibility of cutting at this meeting or in March? And how are you all thinking about the conditions that would merit another rate cut? Is there broad agreement on the committee about what it would take?
So there was broad support on the committee for holding today. Broad, I would say, including among non-voters. So that's where that was. Of course, some people did want to cut and dissented, but committee pretty broadly for holding today. We're not trying to articulate a test for when to next cut or whether to cut at the next meeting. What we're saying is we're well positioned as we make decisions meeting by meeting, looking at the incoming data, evolving outlook, and all that. And we're in a position where we still have some tension between employment and inflation, but it's less than it was. I think that the upside risks to inflation and the downside risks have probably both diminished a bit. So, we'll be looking at that. It's about how you weigh the risks to the 2 goals and how big those, and quantify them. And so there are different views on the committee, and, we'll find our way forward as the data evolve.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. Has the effects of tariffs already moved through the economy on prices?
A lot of it has. So basically, there are many different estimates, and they're all highly uncertain. But most of the overrun in goods prices is from tariffs. And that's actually good news, because if it weren't from tariffs, it might mean it's from demand, and that's a harder problem to solve. We do think tariffs are likely to move through and be a one-time price increase. So most of the overshoot, if you were to take that out, inflation, core PCE inflation is running just a bit above 2% x the effects of tariffs on goods. And the other good news is if you look away from goods and look at services, you do see ongoing disinflation in all the categories of services. So that's a healthy development. So that's what's going on. The expectation is that we will see the effects of tariffs flowing through goods prices, peaking, and then starting to come down, assuming there are no new major tariff increases that are begun. And that's what we expect to see over the course of this year. If we see that, if we see that, that would be something that tells us that we can loosen policy. Also, if we see something that suggests that the labor market is not stabilizing, that in fact the downside risks reemerge or the data just get worse, we'd have to look at both of those. We have a two-sided mandate.
If I could, if President Trump does pick a new Fed chairman before May, what does that look like? How would you work with that person, and what does that transition period look like?
I don't have anything for you on that. That will depend on Congress's actions and things I can't speculate on.
Howard Schneider with Reuters. Thank you for taking our questions. Given the changes in the statement and all you've said so far, is it fair to describe risks to both sides of the mandate as roughly balanced right now? And is the next move necessarily down?
I'd say that the upside risks to inflation and the downside risks to employment have diminished, but they still exist. So there's still some tension between the mandates. Are they fully in balance? Hard to say. And we think our policy is in a good place. I've just discussed reasons why we might change our policy, and we'll just have to see how the data lead us.
I'm wondering, a minute ago you said you felt expectations were consistent with your mandate, that the 2 and the 10-year break-evens had moved quite notably in the last couple of weeks, I believe. Is there any concern on that front?
I mean, I recently looked at all of the both survey and market-based short-term inflation expectations have come way down. They were in a good place at the beginning of last year. They spiked around Liberation Day, and now they've fully retraced in the last few months. So that's very comforting. And the longer-term inflation expectations have remained in places that are very consistent with 2% inflation over time. So expectations
Bitcoin going back
solid,
up,
and they reflect confidence in the return to 2% inflation.
Help us out, Uncle Jay. Help us out.
Andrew.
Captain Rugpool.
Apologies if this is a little bit repetitive, but in the past you've said that the reason you cut rates was that the risk to the labor market was greater than the risk to the inflation side.
That dude next to him looks like a young Bill Belichick.
We haven't made. You're right. We saw the labor market weakening, and we acted, and I think that was the appropriate thing to do. We will always act to address what we see as the economy moving away from our goals. Risks to both of the variables are a little less. I think the upside risk to inflation, again, a little bit less, and the downside risk to employment, a little less. I just would say that I'm not making a judgment about how, one of them is more at risk than the other, just that the risks to both of them have diminished.
Okay, thanks. BIS wrote a paper last summer which concluded that global investors were hedging their dollar exposures in ways that previously they hadn't because of policy uncertainty. Do you agree with BIS?
We really don't see much at all about that whole story. There's just not a lot of data that suggests that there's much to that.
Thanks.
Anna Swanson with the New York Times. Can you talk more about what you would need to see in the labor market to conclude it's time to resume easing? Do you need to see further deterioration in the labor market, or would it be enough for inflation to soften?
So we'll always be looking at both things. And so there could be combinations, infinite numbers of combinations that would cause us to want to move. Certainly, a weakening labor market would be an argument for loosening. But what's happening with inflation? If inflation were at the same time getting worse, you just have a very difficult situation there. So we'll be looking at both. Clearly, a weakening labor market calls for cutting. A stronger labor market says that the rates are in a good place. We'll have to be making similar judgments too on inflation, though.
And if inflation does pick back up and the labor market doesn't show further signs of deterioration, is there a chance that you could raise rates rather than simply remaining on hold? What would you need to see to consider hiking?
We don't take things off the table, but it isn't anybody's base case right now, anybody's base case, that the next move will be a rate hike. But, ultimately we'll do what we think is the right thing. But that's not where people's expectations are right now.
Victoria. Hi, Victoria Guida with Politico. I wanted to ask, you've talked in the past about concerns about the U.S. fiscal trajectory, and we've seen in the Japanese bond market a lot of turmoil recently, in part due to concerns over their fiscal and long-term economic outlook. So do you worry that the U.S. could at some point find itself in a similar situation to Japan, whether for fiscal or demographic reasons?
Over time, you've seen that U.S. rates have remained they haven't moved a lot really for a while, but they haven't moved a lot because of what's been happening in Japan. So it's more of an over time thing. The U.S. federal budget deficit is, uncontroversially on an unsustainable path. The level of debt is not unsustainable. It's very much sustainable, but the path is unsustainable. And the sooner we work on it, the better. But right now we're running a very large deficit at essentially full employment. And so the fiscal picture needs to be addressed, and it's not really being addressed. So that's important. I'm not in any way connecting it to some sort of near-term market event, but ultimately it's something we'll have to deal with. And that, in the end game, that's where you wind up, is in some kind of a difficult thing. But that's not where we are. It's not where Japan is either. But it's certainly not where we are right now.
Does it reduce the effect of your rate cuts that longer term rates have overall not really budged that much?
I wouldn't say that. The thing is, technically, higher longer term rates means less accommodative financial conditions. But remember, many things move longer term rates. It's not mostly what happens on the short end. There can be effects of longer term rates from moving our policy around, but it's much more assessments of the fiscal path and fiscal policies and risks and things like that move the 10-year around. You can look back at and find periods where we've been very actively moving the policy rate over the course of a year, and over the course of that year, the 10-year is exactly where it started. So there's not a tight link between 10-year rates and the overnight rate.
And phase
Thanks
is
so
at
much, Elizabeth Schulze with ABC News.
$40.87.
Republican
It
Senator
could
Tom
happen for me
Tillis, who
still.
sits on the Senate Banking Committee, said he will block any Fed nominee, including the chair,
So if I was
until
at
this investigation into you
24.87.
is resolved. Do you support this move by the senator, and
man,
what
come
conversations have you
on,
had
man.
with
One
the
time.
senator?
We used to say to
I've
book
got
all the
nothing
time.
for you on that.
One
More
time.
broadly, what would happen to American households if the Federal Reserve loses its ability to operate independent from politics?
So really, the point of independence is not to protect policymakers or anything like that. It just is that every advanced economy democracy in the world has come around to this common practice. It's just an institutional arrangement that has served the people well, and that is to have a separation between to not have direct elected official control over the setting of monetary policy. And the reason is that monetary policy can be used, through an election cycle to affect the economy in a way that will be politically worthwhile. So I'm not talking about the U.S. context. This is every advanced economy democracy of any size. So it's a good practice. It's pretty much everywhere among countries that look at all like the United States. And I think if you lose that, first of all, it would be hard to restore the credibility of the institution if people lose their faith that we're making decisions, only on the basis of our assessment of what's best for everyone, for the wide public, rather than trying to benefit one group or another. If you lose that, it's going to be hard to retain it. And we haven't lost it. I don't believe we will. I certainly hope we won't. But it's very important. And the reason it's important is that it's enabled central banks generally not to be perfect, but to serve the public well.
You're confident it can maintain that independence at this point?
Yes. I mean, I'm strongly committed to that, and so are my colleagues.
Archie Hall from The Economist. On that sort of stabilization of the labor market question, how much do you see the weakening we saw over the past 6 months, year, as a kind of data mirage around immigration and the government shutdown and so on that's now resolved? Or how much have we seen a kind of real underlying firming up in the state of the labor market, do you think?
Well, part of it is, to your point, part of it just is that labor supply, growth in labor supply has come to essentially a halt from a fairly fast clip of growth over the last couple of years, driven by immigration, and then the halt being driven by a very sudden stop in immigration. So many outcomes were possible with that. Supply came way down. It turns out that demand for labor also came down a very similar amount, maybe just a little bit more, which is why the unemployment rate has gone up. So I don't know whether that's a coincidence or not, but that's what's happened with that part. But if you look at other things, like, for example, just to pick a couple, the Conference Board's measure of job availability that came out, I don't know, was it yesterday or today? But, it shows, it's a survey showing that workers feel like job availability it's a very low reading. Just one reading, but it's an indication of softening. People part-time for economic reasons, which is a category within the broader U6 category measure, has moved up significantly. So there are lots of, I could go on and on. There are lots of little places that suggest that the labor market has softened.
I have a FaceTime.
But you're right. Part of payroll job softening is that both the supply and demand for labor has come down. Growth in those two have come.
Anyway, I feel like he's just following the script. I don't want to get too political. I just, I just feel like he has his agenda and he knows what Trump's agenda is. And he's just going to not make it easy for Donald Trump. And it is what it is. We're going to have volatility. We're going to have volatility, and as option sellers, that's kind of our playground, right? So it's all good. I got to get on a FaceTime, and I want to go get me something to eat real quick. So I appreciate you guys tuning in. There's still a few people rocking with us here, 48 on YouTube, 903 on Twitter. I appreciate each and every one of you guys. I know it's a long stream today. No need for a market recap. You guys know what I'm trying to do, right? I'm trying to sell in phase, potentially buy SoFi, just to reduce the buying power. I don't like the buying power percentage. So once the PayPal trade works out, I could revisit that. If I feel a little skittish, I can always just cover that in phase at any time. That's the beauty of having those financial options available, but makes it tough, right? Because, you sell in phase and then it gaps up $10 on their earnings or something. You feel like an idiot, right? These are all the gimmies and the gotchas. And that's what makes selling options and, doing what I do, full transparency, very, very difficult, because, a lot of other content creators will kind of like try to keep those moves under wraps, if you will. But I try to show you all everything, the good, the bad, the ugly, and the indifferent. TJ the Wheel Deal signing off. As always, remember, guys, stay blue, stock screen. Peace out. God bless you guys.